Hello and welcome. You tuned into Your Trades with me, Ankita Saxena, and with me is Ankur Mishra. In the next half an hour, we'll take you through how the market shaped up today and what are the cues to watch out for come tomorrow's trading session. But first up, let's take stock of how the market was really today. And Nifty was trading, in fact, we saw good recovery coming in at one point of the day. We saw those declines coming in, but were very smart recovery that was posted. Post that, we were below the 25,100 mark, 200 mark, but we managed to recover from the day's lowest point. In fact, there was a recovery of almost 75 odd points on the Nifty. As you can see, a sharp recovery. 25,202 is where Nifty ended the day. Turned very flat at the closing, but nonetheless a recovery on Nifty. But Nifty Bank also managed to scale those levels. It recovered smartly. It recovered almost 140 points from the day's lowest point. It ended on a high note towards the highest point of the day, with gains of 0.2% coming in Nifty Bank. In fact, the PSU banking pack was the one that was taking the charge. That was up in a way of 1.8%. So Nifty Bank has been an outperformer and continues to take the lead. In fact, PNB, Bank of Baroda, Indian Bank, Canara Bank, SBI, UCO Bank, IOB, these were all the names that were trading upwards of 1.5% in the trading session today. Besides that, we had Nifty Media and Nifty IT also that was doing well in the trade. On the losing side, we had Nifty Metal that lost its sheen. In fact, that was down 0.5%. Nifty Pharma and Nifty Financial Services was marginally in the red. So these were the counters that were on the losing side. But besides that, a couple of names that were in focus today. M&M was the top Nifty gainer. Now, that was on the back of the fact that M&M has actually trumped Hyundai Motors to become the second largest automobile maker in the domestic market, and they have trumped Hyundai Motors to this. And Tata Motors has taken a back step. In fact, it has slipped to the 4th position. So, the bit of a rejig coming in as far as the auto sector is concerned there. So, that was in focus. Besides that, we also had Shilpa Medicare that was in focus today because the Bangalore unit has received a US FDA approval. A couple of other names from the pharma pack. Zydus Life Sciences, again on the back of an approval by US FDA, and so was Biocon. That was on the back of an approval for a diabetes drug. So from the pharma pack also, these were a couple of names that were buzzing in trade. Biocon also trading up 1% in trade. So these were largely the names that were in focus on the back of US FDA approval coming in. Largely a day of recovery is coming in, I would say, because we had the advance decline ratio that was tilted in the favor of advances by the time we shut shop, Ankur. What are you picking up?
Yes, definitely a smart recovery after a low of 25,121 and ending above 25,200 mark. But let's also take a look what made headlines today. Apart from market, SBI is set to launch 25,000 crore QIP this week. There's also eye on Axis Bank, Wipro, IHCL Q1 numbers tomorrow. Cabinet has approved a PM Dhan Dhan Krishi Yojana and US-Indonesia deal done. More letters soon.
Alright, moving on to the word coming in from the Vice. Mihir Vora, who's the CIO of Trust Mutual Fund, shares his top sectoral picks. Let's go across and listen to his rationale behind it.
The visibility, the sectors in which there is visibility are still linked to government spending. So the government spending does not seem to have come off. So to that extent, I think we will see, that infra push, the power, telecom, defense push continue, and you should see news flow in this segment to continue. So that's one segment where, relatively speaking, there is better visibility. As I said, the retail financing space, there seems to be better visibility. Some pockets of rural financing like microfinance also might be a play now because valuations had corrected. Government is spending a lot on the rural economy. So rural economy seems to be on the healing path, so to say. And microfinance, of course, is a direct beneficiary of that. So microfinance, small gold loans, etc. Those segments can continue to do well. You might see some base effect in a lot of the capital goods stocks because last year was a low base. So that's a positive. Some base effect in the metals piece, so there might be some pockets of value out there.
All right, let's shift focus to the banking space, and SBI is all set to launch its 25,000 crore QIP as early as this week. My colleague Anurag Joshi is joining with more exclusive details.
State Bank of India, India's biggest lender by assets, is likely to launch its qualified institutional placement to equity investors as early as this week. Sources are telling ET now. Now, the banks who are managing the proposed sale are Citi, HSBC, Morgan Stanley, Kotak, ICICI Securities and SBI Capital Markets. Interestingly, LIC is likely to anchor around 7,000 crore rupees of the QIP. Sources also inform ET now. SBI had been in talks with banks in the recent past for the QIP, and this equity sale is likely to be among the biggest sale of shares by issuer this year in India.
All right, moving on then. Let's get on board Akshay Bhagwat, who's the Senior Vice President, Derivatives Research, JM Financial Services, who's joining us to weigh in on the markets. Hi, thank you so much for joining us, Akshay. Akshay, if you look at the frontline indices, in the last 5 days, we have been very, very range bound. Within that range, we have been trading. When can we really pick up a direction on the market, and what are the important levels to watch out for Nifty? Nifty Bank, of course, has been doing better than Nifty. So what are the levels to watch out for on Nifty Bank as well?
Good afternoon. Well, if you look at the volumes, that's where the problem lies, because we have seen a slide in the index, but the volumes are really going down. So there is not much participation right now, even in the slight correction which we saw in the Nifty. The silver lining was that the 25 support has been a saving grace for the Nifty. That's the point where a lot of weekly put writers were positioned, and that's the reason why you had a kind of a bounce back scenario in the last couple of days from the levels of 25,000. Now, really, when the momentum or the action will return back in the indices. So tomorrow is the weekly expiry for the Nifty index, and in all probabilities, that is the day where normally you have some action picking on in the index, and the chances are that, looking at the slight bounce back scenario, there is a good chance that Nifty can try to recover the momentum back again and try to hit the upper end of the resistance band, which right now it placed at around 5,375 levels. So currently the levels, if one is a short-term trader, the levels to watch will be the support of 25,000. That's the short-term support, and 25,400 is the resistance zone. The broader outlook for the remainder part of the July series continues to be range-bound to choppy within this broader price range.
All right, Akshay, hi, Ankur this side. You're mentioning about range-bound trade, but two of the sectors which has been performing well are IT and FMCG. Why I'm saying IT? Despite two bad numbers, yesterday you would have noticed IT index was up. Similarly, today also it was up around 0.5%. I want to know what is your pick in IT sector, and also FMCG is something which has been doing well recently ever since the business numbers were out.
Yeah, so firstly, to talk on the IT sector, TCS was one of the first stocks in the sector to kick off the result season, and the results announced, the street reaction to the results was not a positive one. There was some weakness, and even HCL Tech, which came out with the numbers a day before yesterday, were not given a thumbs up by the street. So there was where the slight corrective action was seen in IT. Yes, today you have a bounce back day, and you have the big boy Infosys coming out with its numbers on 23rd of July. Overall way, the texture of the stock is shaping up from a short-term perspective for Infosys. It looks like possibly the street might give a thumbs up to this result name, and that is the reason why you have some follow-up action supporting the IT names today. Slight bump up in TCS, Tech Mahindra saving the day for the IT name, and also there was some good pickup in Infosys. So I believe this is more of a short-term bounce back. Broadly, if you were to see the IT index as such from a July month perspective, it is confined in a trading range. So it's more of a trader's sector, which I understand, with Infosys probably supporting. There can be some bounce back intent in the IT names. Secondly, you asked about the FMCG sector. Now, FMCG is one sector you can really bet on, because if you look at the way majority of of the stocks are positioned in this sector. They have been doing great in the last few trading sessions. The derivatives July series has seen long addition in most of the names. Stocks with the like of HUL have recovered well. They have seen breakouts of the short-term technical structure. ITC, Varun Beverages, these are a couple of other names in the FMCG pack. Nestle India was one which recorded strong intraday gains. So over and over, if you look at stocks per se, the action has been good. And really, if you were to take a bet on the which sector should do well for the remainder part of the July month, I think it's worth taking a long bet on the FMCG names, because most of the stocks here still have a 3 to 4% upside left, going by the current price readings of the stocks.
All right, Akshay, finally, do tell us your top picks in this market. What would be your calls?
Yeah. So as I mentioned, I'm pretty gung-ho on the FMCG space. This is the space which will be least affected even in case there is a rough patch in the market. So to start off, I think Varun Beverages was one of the names I mentioned. So I believe today there was a trading breakout on technical charts. This comes after the stock is confined in a range of 450 to 465 since the last 8 to 10 trading sessions. So that's a very positive development in the stock, backed by volume. So I'm looking forward to target still 497. That is target number one, and possibly it can be extended to 510. So with these two targets in mind, you can hold or buy Varun Beverages with a stop loss below 462. The other stock also will be from the FMCG pack. It is ITC, where the similar kind of price pattern has been noted. A strong support base at 415 has been cemented. Momentum has been picking up in the last 3 days, and the momentum can drive the stock all the way up till 435. That's your target one, and 440, which is your target two. So these are the possible two targets you can look forward in ITC Limited from a July month perspective.
All right, so ITC and Varun Beverages advice coming in from Akshay. Thank you so much for joining at this hour. And moving on, my colleague Ravinder is ready with a list of stocks which were in news. Let's go across to Ravinder.
Well, Shilpa Medicare is in focus. Our company has received EIR from US FDA for the company's Unit 6 facility at Bangalore, and the facility is capable of manufacturing, testing, storage and distribution of two types of complex dosage form, oral dissolving forms and transdermal system. Apart from this, NLC India and NTPC is also in focus, where cabinet has allowed NTPC and NLC India to enhance investment in renewable energy project, and NTPC will invest 20,000 crore in renewable energy project, while NLC India will invest 7,000 crore in energy project. So back of this, both NLC India and NTPC is also in focus. Moving to next, Brigade Enterprise is also in focus, where Buzzwork, the managed and flexible office arm of the Brigade Group, has announced its latest pre-emergent center at the Mindspace Park, High Tech City, Hyderabad, with a spanning of over 50,000 square feet. Apart from this, on back of Q1 earning, DB Corp is also in focus, where company has announced the Q1 FY26 earning, and company reported revenue at rupees 59 crore as compared to 519 crore, which was down by more than 5% year-on-year basis, and company's net profit also declined by more than 31% on a yearly basis. If we talk about EBITDA margins, then company reported EBITDA margin at 19.8% as compared to 27.9% on the previous year. EBITDA margin declined by more than 800 basis point on a yearly basis. And lastly, NMDC is also in focus on the back of the brokerage note, where Antique has come out with the note, and they have maintained their buy rating with target price of rupees 86, and Antique say that the domestic still demand to support volume outlook for the company. So back of this, NMDC is also in focus.
All right, so those were the stocks that were in focus in today's trading session. But another stock that will be in focus on the back of Q1 earnings is IT giant Wipro. That is all set to release its Q1 earnings. Let's go across to my colleague Pulkit, who's standing by with the details of what the street is penciling in for Wipro.
After TCS, HCL, Tech Mahindra, now it's time for Western India Palm Refined Oil Limited, that is Wipro. So if we talk about the Q1 expectation of Wipro results, so for revenue in USD terms, we are expecting around minus 1.1% dip. For INR terms, around minus 2% dip. For EBIT, around minus 2.5% dip. For EBIT margin, 16 basis point dip. And for profit after tax, around 9.5% dip. If we talk about the segment-wise expectation, BFSI and healthcare may remain good and it can provide the good cushion to the margins. But when it comes to the manufacturing, tech and communication, they will be soft and they might hit some on some margins. If we talk about the deal pipeline, it would remain solid, but when the revenue conversion comes in, it may remain sluggish. For the guidance that company provided last quarter for FY26 Q1, around -3.5% to -1.5% drop in CC revenue growth was expected. Now it would be good to see how the company is shaping up with the results. If we talk about the key monitorables in the management commentary, FY26 guidance, what company is providing would be great to see. Update on the Marelli bankruptcy impact. Marelli was one of the client, so how it is impacting to the business. The discretionary spend from the clients, the headcount and attrition trend, and most important, the tariff and geopolitical tension, how they are shaping up with the business and how it can be helpful. So it would be great to see how the company is performing and how the share will perform.
Thanks, Pulkit, for those details. After Wipro, let's shift focus to Indian Hotels, which is expected to report Q1 numbers, and both top line and bottom line are expected to see a significant uptick on a YOY basis. Snehi is here to tell us what more the street is penciling in.
Well, yes, once again, we're expecting to see a good set of numbers from Indian Hotels. This is what they had reported last quarter as well, an inline set of numbers. So, a decent set of numbers last quarter, and we expect that trajectory to continue this quarter as well. On a consolidated year-on-year basis, if you take a look at the revenue, we're expecting this number to come in at around 1,976 crores to 2,000 crores, anywhere between that range, an uptick of roughly 27.5% on a year-on-year basis. EBITDA is seen at 577 crores, which is up 28% on a year-on-year basis. Net profit, we're expecting this metric to expand by 30%, or rather more than 30% on a year-on-year basis, at 325 crores compared to 248 crores this time last year. And for margins too, we're seeing a healthy expansion at 29.5% compared to 29% this time last year. Now, some key expectations that we're hoping to see from the company's numbers. Earnings growth is expected to be partly aided by the TajSATS consolidation that the company had announced last quarter. Just to bring our viewers up to speed and jog your memory a little bit on the consolidation of TajSATS means that TajSATS is now a subsidiary of the company instead of a joint venture earlier. And on the back of this adjustment and consolidation, remember IHCL had booked a gain of 307 crores last quarter as well. So this momentum is expected to continue this time around too. TajSATS is expected to grow in high teens on a year-on-year basis. Ginger portfolio to grow by 20%. High single-digit growth is what we're penciling in for the international segment. Their ARR, which is their average revenue rate, is expected to grow by 7% on a year-on-year basis, and RevPAR, which is revenue per available room, is expected to grow anywhere between 12 and 14% on a year-on-year basis. Now, some important factors to watch when the numbers do come out. Expansion and room addition plans. Any commentary on this by the management will be key to watch. Commentary on impact due to border tensions in North India, that could be a slight dampener on the company's numbers. So this is going to be crucial. And contribution from new business verticals, the likes of Ginger, Cumin, AMA Stays and Trails, what their contribution has been to the top line, this is also going to be important to watch out for. So watch out for IHCL's numbers, but well, yes, all in all, a good set is what we're expecting.
All right, a good set of numbers coming in from IHCL, but another earnings candidate, Axis Bank, is also all set to report its quarter-one earnings. The street is expecting a softer quarter, with asset quality deteriorating and margins to be under pressure this time. My colleague Varun is joining in to tell us what to expect from Axis Bank.
Well, we are expecting a soft quarter for Axis Bank, wherein the net interest income is expected to grow in low single digit. We are expecting the net interest income to grow by around 2.5%. The PPOP, that is expected to go up by around 9.9%. Although the slippages, they are going to be at elevated levels, we are expecting a 20 to 25% jump on a YOY and quarter-on-quarter basis, and that will impact the overall profitability of the company. We are expecting the profits to grow by around 5.5% to around 6,370 crores. Now, the company has been delivering single-digit advances growth since last few quarters, and this quarter also we are expecting the loan growth to be around 7.5 to 8.5%. Although the deposit growth, that is expected to be in double digit, we are expecting it to be around 12 to 12.5%. The company's credit cost is expected to grow in this quarter, and also the NPAs, if you look, they are expected to go up from 1.28% to around 1.4%, and also the net NPAs will increase from 0.33% to around 0.4%. The net interest margin that is expected to decline a little bit from 3.97% to around 3.9%. So if you look at the overall results of Axis Bank, it is going to be a slow quarter, a soft quarter for Axis Bank, wherein the growth, the NII growth will actually be in low single digit, and also the advances growth is again going to be in single digit.
Thanks, Varun, for those detailed. And my colleague Snehi is ready for all the details of what are the cues which should be watched out for tomorrow's before market opening. Snehi, over to you.
Lots of cues to watch out for. Given it's Thursday, all eyes are going to be on the weekly Nifty expiry, so watch out for this. In terms of global macro indicators, you have from the US retail sales numbers that will be out along with initial jobless claims. From the UK, you will have jobless claims along with unemployment numbers out. From Eurozone, you'll have the inflation print in the form of CPI that will be out, so track that sector, that metric very closely. And from Japan, you'll have the trade data numbers that are going to be out. In terms of global earnings, all eyes are going to be on Netflix, Novartis, Abbott Laboratories, PepsiCo and ABB. So it's going to be the broader pharma space, consumption space, entertainment. All of these stocks are going to be in a buzz in overseas markets. But shifting to action back home in terms of some Q1 earnings, all eyes are going to be on Nifty 50 majors, Wipro, Axis Bank and Jio Financial that will be coming out with their Q1 numbers. But even other than these Nifty 50 stocks, you have a whole list of stocks from the broader end of the market, the likes of HDFC EMC, Tata Communication, LTI Mindtree, Polycab, CAT, Indian Hotels, and a whole host of other stocks that will be coming out with their numbers. So watch out for all of these stocks very closely in the trading session. In terms of annual general meetings, you'll have Tech Mahindra and Ajanta Pharma that will be in focus. And in terms of corporate action and board meetings, lots to watch out for here as well, because Tata Communications, along with its earnings, will also be mulling fundraising. You will also it's also the last day to buy shares of Happiest Minds, HCL Tech, Jubilant Foodworks, Birlasoft, Cummins India, and a whole list of other stocks if you wish to be eligible for their interim dividend record date. So watch out for that as well. And lastly, in terms of other events, the G20 finance ministers and central bank governors will be meeting in South Africa. And from the Fed commentary front, San Francisco Fed President Mary Daly is all set to speak. So watch out for all of these cues. Lots to watch out for and lots to track.
All right, lots of cues to track and watch out for. But with that, it's the curtains down on this edition of Your Trades. Ankur and I will take a leave. Thank you so much for tuning in.